Hello guys, so I'm going to use this video to explain the MACD indicator. So I'm going to talk about how you can add and customize the MACD indicator on your chart, how you can use the MACD indicator to identify momentum in the market, how you can use it to identify areas of reversal, how you can use it to identify breakouts and breakdown, and how you can use it to identify trend, to filter trend. So the first thing I want to do right now is add the MACD indicator. For you to do that, you need to go to indicators. So you click on indicators and you type MACD, and you can find it over here. This is MACD. So you tap on it once to add the indicator to your chart. You can see it over here. So this is your MACD indicator. So let me talk about the indicator properly. There are three components to this indicator. We have the MACD line, that's the blue line, and we have the signal line, that's the orange color line, and we have the histogram, that's this red and green bars over here, red and green bars over here. So that's it. You have your okay, let's do it like this. You have the blue line represents your MACD line, the orange line represents your signal line, and the bars, red and green bars, represents your histogram. So how do you use a MACD to identify momentum in the market? So for you to use MACD to identify momentum in the market, you have to look at the histograms. The histograms, that's this point, the histograms, the red and green bars. So those are your histograms. So the green bars are your bullish momentum in the market. So you see the green bars when prices are going up, and you see the red bars when prices are going down. It's trying to tell you that sellers are in control, the market is bearish, and the green one tells you that buyers are in control, the market is bullish. So how do you combine this with price charts? How do you combine the MACD? Okay, let me talk about how you can use the MACD to know regions of high volatility and low volatility. So you know that volatility is the volume of the market, that is amount of buy and sell, how active the market is. If the market is volatile, it means that the market is very active. You have buyers and sellers coming in to buy and sell. But if the market is not volatile, the volatility has contracted, like over here, let me draw it. Like over here, you can see that the volatility has contracted, because if you look at the MACD indicator, you will notice that you can hardly see the histograms, that's the red and green bars. You can hardly see them. So that's to tell you that volatility has reduced in the market. Okay, now look at this place over here, from this area over here going, you can see very well that volatility in this market has increased because the range of the histogram over here are larger than the histograms over this side. Remember that I told you that the green histograms are indicating that the market is bullish, that prices are going up. So let's use this box of a green histogram as example. So you can see it over here. So this box actually starts from here to here. So you can see it. You can see price came down over here, then the MACD, the MACD indicator volatility increased over here, and you can notice how price went up over here. You can notice it. So that's trying to tell you that buyers are in control, volatility is high in the market. So what about when sellers are in control? Let's look at the bearish momentum. So you can see over here, you can see the red MACD histogram showing you that from here to here, you can see that price went down along this place, showing you that sellers are in control. So what about when volatility is low? So checking over here, you can see that volatility is low. You can see the market is not active. The range at which it is moving is very, very small. And looking at the MACD histogram over here, you will notice that you can barely see the histograms. Then that's trying to tell you that volatility is contracting. So how do you trade the MACD indicator when volatility is contracting? That's when you want to look for breakout and break down. So what you do is that you draw your areas of support and resistance. So I have my support over here. Let me change it to green, and I have my resistance over here. Let me change it to red. So you can see that in this box over here, I have my support and resistance, and I can see that over here volatility is reducing. So what I do is that I look for breakouts. I look for price breakouts. So for me to enter this trade, as long as the price is trading between a support and resistance, I'm going to be bearish about this market. And you can see my moving average is there too. So the price has to break above the moving average. Let me edit it to 50 period moving average. So the price has to break above the 50 period moving period average. It has to break either support and resistance for me to take a trading position. So you know that volatility, when you see volatility contracting over support and resistance, you don't actually know where it's going to break out. But what you do is that you trade in the direction of the breakout. Once it breaks out and you have a retest, like over here, you can see that price came down, break down, but it did not close it did not close over the support. So price broke back above resistance and went up higher. That's trying to tell you that the trend, that's volatility, is going to increase upward because price has broken resistance and is going to trade higher. And you can see it over here. You can see it over here that once the price broke up, you have a low volatility over here. Then price broke out over here. You can see it went up. So that's it. You have a low volatility over here. You can barely see what the MACD is saying over here, and that's indicating over here this region of support and resistance. So what you want to do is you either trade the breakout or you trade the breakdown. In this case, the price broke out. So once the price broke out and closes above the top of the resistance, you go long on that trade. So how do you use a MACD indicator or MACD indicator to filter trend? So this how you do it. You can see over here. So the secret to this one is that if you are in a lower time frame, for you to use the MACD indicator to get a trend bias, you need to go to a higher time frame. For example, you're a swing trader and you usually trade the 4-hour time frame. So for you to use the MACD indicator to get a trend bias, you go to daily time frame and higher time frame, like a daily time frame. If you are trading on 1 hour time frame, like you're a day trader, you are trading a 1 hour time frame and below, you can look to reference the 4-hour time frame. If you are a position trader, you can look to reference the weekly time frame. So how do you use a MACD to identify trend? So this is where the MACD line and the MACD line and the signal line comes into play. You know, I told you earlier that the MACD line is the blue line and the signal line is the orange line. So for you to use it to filter out your trend, you have to look for the cross. You can see over here it is trying to cross down. So each time the blue line, the MACD line, crosses below, each time the blue line crosses below the red line, it is trying to tell you that prices are going to go down. It is bearish. The prices are going to go down. Okay, let me show you an example over here. So over here, this place over here, you can see that the blue line crossed below the orange line, and you can see that price went down over here. It went down. So that's it. Each time the blue line crosses below the orange line on your higher time frame, you know I was on 4-hour time frame before, but for me to use this, I have to consult higher time frame, that's daily time frame. So when you see this happening already, you can see that the MACD histogram has started indicating red, and you can also see over here that price has broken below the trend line. Over here, price has broken below the trend line. So that is to indicate you that the market is bearish at the moment. So once you go back to the 4-hour time frame, you want to be taking a bearish stance. You want to be taking bearish bias. So that is it. When the MACD line, the blue line, is crossing below, let me make it more obvious. So when the blue line is crossing below the orange line, it's trying to indicate to you that the market is going to turn bearish. That's why you have this red MACD region over here. And when the blue line is trying to cross above the orange line, is trying to tell you that the market is going to turn bullish, and that's how you have this green, and price are going to go up. So once you see the cross, you use the MACD cross to identify trend. For example, on your higher time frame, on your daily time frame, the MACD line, the blue line, is crossing below the orange line. You want to have a shorting bias because the market is bullish, bearish. So, and also when the MACD line is crossing above the signal line, that is, the blue line is crossing above the signal line on your higher time frame. You know, if I'm a day trader, my time frame is usually 1 hour, but my higher time frame then can be 4 hours. If I'm a swing trader, my time frame should be 4 hours. Then my higher time frame is the daily time frame. Then if I'm a position trader, my time frame is 4 hours. It's daily, but my higher time frame is weekly. So that's how you consult it. Once you see the MACD line crossing below the signal line on your higher time frame, is trying to tell you that the market is going to turn bullish. And you trading now on your 4-hour time frame, you are going to be looking at bearish bias. You are going to be looking at shorting the market. So that is it about this MACD indicator. So for you to do this, for you to do this, you have to draw your market structures. You can see I have already identified my areas of support, resistance, trend line, and added my moving average. So you need to add your market structures in order to better identify when MACD is going to break out or break down on air, or better use it to see identify breakdown of trend. So that's it. That's all for this video.